Hello everyone. Let's talk about our positioning and what we deem to be the biggest risks going forward, and a couple of trend and trade ideas that we've already put on. Let's just go by the list. Bitcoin. It behaves right now, as of this moment, as it usually does during the end of the down cycle. No one talks about it, no one writes about it, and there is almost virtually zero realized volatility relative to what it usually realizes, which is good, which is what usually happens during these periods. We are in this type of a format, no volatility whatsoever on a realized basis. What would be really nice here, what would be really nice, is another drop down to 58, 55, even into 50,000 would be very preferable. That would be an insanely good buying opportunity. I would expect, as I've said, Bitcoin to find the bottom, the ultimate bottom, somewhere in the middle of this autumn, and from there, even if you, once again, nothing exciting, we are not expecting anything extraordinary. Usually it takes, after the signal turns positive on a tail basis, it usually takes up to 2 years to reach the previous all-time highs. So even if you accumulate your baseline position, let's say at 60,000 in here, that is a 111% back to all-time highs. Let's say that's 100% over the course of 2 years. That's an average 50% return. Let's say you can realize 80% over the course of 2 years, at an average of 40%. However way you look at this, it's really nice investment. It's rather uncorrelated, but just given how it moves, given how Bitcoin has shown multiple times that it moves on its own, mostly, I cannot describe to you the forces that move it. I just know that it is flow, and that's it. As I've said multiple times in every single video that I've made, it's we are in a neutral trend, a neutral tail, for the first time since, well, since we broke tail in here and it marked the end of the cycle. As I've said multiple times, that it exhibits the profile of a sine curve, and every single upcoming cycle will be more and more muted. The expected return is going to be less and less, so that's what we're expecting essentially. But nonetheless, it presents a good opportunity coming forward, and given what we are seeing with rates and what we are clearly hearing the administration and people which are connected to administration, and people which are not only connected to the administration but are responsible for the bond market, are saying that they are preparing a facility to backstop the long end of the US Treasury market, which is, well, no wonder, right? We've been talking about this for a long time already, and rates are, well, they are already breaking out. There are all of the signs of relative strength, regardless of whether inflation comes weaker than expected or it is a sequentially lower print. Rates on the long end go up. They just go up. Inflation comes in very soft. We see a down move, test of trade in rates in long end, and then we're shooting back up again. Given what we are thinking, that if they are not going to cut rate, if they're not going to raise rates next meeting, 24th of September, we have a really nice chance of long end just becoming unpinned, which it is essentially signifying right now. So the conditions and the setup, the infrastructure is there. All we need is a catalyst. If we get a catalyst, we will see an unpinning of the long end of the US yield curve, which will be, as we've seen multiple times right here, it was negative solely on a technical basis and a correlation basis. When we get a big move up in the yields, everything is getting sold off naturally. But then we know what's going to happen after that. So I can imagine a scenario where we get this type of a move in rates, and Bitcoin falls to 55.50. It doesn't matter how low it falls. We know what the response is going to be from the treasury, and yeah, that would be an opportunity. But ultimately, there is no signal as of now to buy it. There is no such signal as we had every single time during the previous end of the down cycle here, and we are painfully aware that during the two previous down cycles, where we were very close to bottoming out, we've had a not negative, but false signals twice. It was right here. You realized essentially 0%, but you avoided this massive drop. This was that's not an idiosyncratic move. This was a black swan. You might say same thing was here, like a black swan event. But it counted as a false signal. You realize like -3% in here. So if the signal turns unbelievably positive here, which it already did, but we are in neutral. We are not in positive tail. We're in neutral tail. So yeah, we shall see how it's going to play out this time around. But we are watching this very closely, and we would like to accumulate in around minimum 10% position in it, plus some long-term leaps on it. Leaps, and given what if you look at this, I bet play it from the option side, like 50 to 70, you go, I bet you accumulate your spot position plus a couple of leaps, and you go, where is it? January 28. That's 1.5 years out. Let's see what it gives us. 50 cost 5 and sell 70. That gives you an enormously large window of time. January 28th, that's 1.5 years out, right? You're getting, what is it, to 50 set to 60. That's a big 1 to 7 risk reward. Really nice, really nice. Now you put in it like 1% plus all of the spot positions, and if the cycle plays out as it usually does, plus your break even is 52, it's not unimaginable to see this thing reaching 52. So that is a setup that we are looking for here. On the relative things that we are also looking for, by the way, not only there is no decisive signal on the long side in the Bitcoin itself. If you look at every single proxy, Bitcoin proxy that you have, be it in equity space, be it in crypto space itself, Ethereum, BNB, Solana, none of them are signaling positive tail or positive trend. So yeah, that's not good. Hood is a favorite of ours. We are observing it very closely, and when the signal comes, we will initiate position in here. Coin is negative as well. MSTR is negative as well. So we are expecting another drawdown before we actually bottom out and initiate a position here. One of our favorites to put on I gotta add this. Her like a kitten, Hyperliquid strategies. Hyperliquid we know is an exchange, and if we are gonna get the resemblance of the normal Bitcoin upcycle, this is gonna be it. This is gonna be the thing to hold per BHYP. It's the token of the exchange, as BNB once was very popular and a very nice exchange to use. It did a very gave you very nice returns, especially in previous cycles, right? That's what you have here. These are nice returns. These are big movements. Hype, BNB is a well-developed, settled already exchange. There is nothing big to expect from it, but Hype might actually do something extraordinary in the upcoming cycle. We shall see how the cycle is going to pan out. If there is no, once again, there is no repeat of this, we're not going to see this again. We're not going to see 700%. Once again, if we get that 100% over the course of 2 years, we will be extremely happy. So, yeah, it is what it is. It's what we have in Bitcoin. Dixie. Dixie is a part of a big and rather complex puzzle. Rates, markets, manipulation by the Fed, by the Treasury. Dixie, up to this point, was reflecting the fact that rates are exploding at the back end and at the front end as well, but more so at the back end, and was reflecting that reality. But when the USD/JPY weakened too much, as it usually does, they've intervened. They've intervened significantly. They've done something. Well, it's not an explicit Plaza Accord, but when the Treasury helps stabilizing the currency of the other country, regardless of what country it is, it's rather significant news. And this is your manipulation, which, by the way, this time actually meant something. This manipulation broke trend. Usually, these injections of liquidity, as you can see here, and previously here and here, these injections of liquidity lead nowhere. This time it also led nowhere, but this time we actually broke trend. So, these manipulatory periods are only the sign of what's to come. This is the thing that they are going to be doing with the US yield curve as well, with the long end of the US yield curve, and this is what is going to continue. This is going to be happening much faster and much more often, and we are clearly seeing the path that it takes. This is the debasement of the currency and devaluation of the US dollar, clearly, which we've been talking about. Now, even the J.D. Vance, the administration, comes out and openly says that we want to end the exorbitant privilege of the US dollar. We want to stop exporting that much dollars. We want our people to consume more, but not be dependent on this exorbitant privilege. But yes, it all can be done. But the dollar is the most expensive currency on a trade basis out of all of them, out of all of the developed currencies. So we are talking about devaluation of the dollar, which will bring, in that reality, in that world, dollar Dixie down to 80 and below. Is this the beginning of it? I don't know, but once again, the conditions are in place for it to happen, and given the rhetoric, which has changed significantly, that is an interesting possibility. There is nothing to do in the dollar and in currencies at large, other than just looking at it, studying in it, and using it as a signal, right? Just gauging and using it as a signal. This was a positive trend, and this is a negative trend. We are in negative territory. Every bounce in Dixie is meant to be sold into. USD/JPY, nothing to do in currencies. Oil, and especially oil stocks offer a nice hedge to your portfolio. What is very notable from the oil perspective and the oil futures curve is the front month, like September, for example, is still in a negative trend territory. Right now we are leaning into the neutral, but still negative. But the long end of the of the curve, of the futures curve, like say December contract, is positive trend. So that says that market is expecting once again this trend to continue and oil to stay elevated and all of this to continue. Obviously, it will continue. If that is the case, that means that things like XLE, XOM, and all of the related equities, the proxies of the oil price, are a very nice hedge. These things will continue. Things will go up. So we will start accumulating positions in XLE, in XOM, in crack, in oil services. Interesting position, potential position in LNG, given that they are going to be Europe is going to be rebuilding their stockpiles, their stocks of the natural gas going into the winter. Where they're gonna get it? They're gonna get it mostly from the US once again. So things like LNG, EQNR, EE, VG are set to benefit from it the most. So we're looking to build up our 10% allocation into this. The biggest risks to the equity market, to the risk-on environment, I would say, is still oil, and unhinged move higher in oil, which I would say rather muted. This unlikely scenario. It's unlikely to happen before the midterms. They're not going to be doing anything before the midterms. Before the midterms end, that is. Other than that, every single potential negative calamity, well, calamity is negative, will come from rates themselves, which we will get into. We'll leave uranium be. Yes, gold, super nice, very, very nice signal from gold, very nice decoupling from gold, given what we've seen, given this intervention in Dixie, in USD/JPY, given, look at this, massive move lower in here. But the signal picked up a shift into neutral trend and positive tail on this day. Signal was positive on this day. And then we've clearly seen on these 2 days a creation of a trend higher-low. This is your trend higher-low creation. Yields on the long end across the entire curve were exploding to the upside. And this was the first time since all of this saga with inflation, with rates going higher, with the Iran war began. These were 2 days of a complete break in correlations between gold and the dollar. And as you can see, right? Look at this. This is your move in Dixie. This is your move in gold. Gold broke this correlation and is now, it's uncorrelated at best. That was a good sign. This was a shift into positive signal. This was a confirmation. And yeah, that's what you get. This thing still offers probably the best risk reward, because from the investment perspective, given what we are observing, which we'll get into rates in a couple of minutes, this offers an potential another like 100% move higher over the course of years if what we think is going to happen with rates are actually going to happen. This was the shift into negative trend since there's multiple years of an up move. Natural but very rather artificially created crisis happened. Yields went up, and now yields are getting to the point where they literally have to debase the currency to stop them going up, to stop, let's say, the drainage in USD/JPY. USD/JPY is just the first signal, is just the first leg of it. Once again, it's all about the US Treasury market. They need to stop USD/JPY to selling off. They need to stop the currency selling off, because if they don't stop and provide liquidity and help them backstop Japanese, that is, help them to backstop that currency, they're going to start selling US bond market, US treasuries, in order to fund their attempts at regulating and financing their problems. And as we know, the net investment international investment position of the US is like negative 60%, meaning that all the money in the world which are saved up by the wealthy nations like Japan, like Norway, like Europeans, like all of them, is in the US stocks and bond markets. And once again, if problem arises in Japan, it's instantly becomes the problem of the US bond market. Problem arises in Europe, instantly. We know that. We've talked about this multiple times. So yeah, and we're getting to the point where, holy moly, it's getting scary. General outlook on gold, positive trend, positive tail, positive everything. Expect continuation. However, it might be continuation up to 49 into this trend lower high, the last one that we've seen, and then it will be a decisive moment for the gold price, and very important. Either we fail at this trend lower high in here and create a tail lower high, which usually ends, this was your tail lower high, this was your tail lower high, which usually ends all of these cycles. It will be the end of this upward move in gold price, and it will be essentially the end of gold will become uninvestable. But there is still some delta to be picked up. Once again, there is a like 10, 7, 8, 9, 10% back to this level. And then we shall see that it's going to be consolidation in here, and then a breakout into another like 100% into the 7, 8, 9,000. Or there's going to be it. But what I've been able to gather, and given the nature of this move, given what awaits us on the horizon, I don't believe that. This looks like an accumulation phase rather than a distribution phase, because distribution happens rather differently. This looks like this looks like that, and we're gonna get into the trend, and we're gonna consolidate, and we're gonna move up again, hopefully. I don't know, but you have to be invested. You have to be invested in it, and then make a decision when the time comes to make a decision. So yeah, we have right now 40% invested in gold, 40% of the entire portfolio, plus 0.5% in GLD 450 500 call spreads, which expire this 2027, January 18, 2027. Essentially playing that potential scenario of a blowout in yields, which will ultimately lead to a big move higher in... I'm not sure that that's going to be a move into the all-time highs. We're not going to be realized, most likely we're not going to be realized that the entirety of that positive 1-to-8 risk-reward ratio, but that we are going to get during the next 2 months, let's say going into the mid-October, a serious move into 450, 460, and that's going to be enough for those call spreads to balloon and give you a really decent risk reward, I think, and we shall see whether we're going to be closing now or not. But yeah, this is the thing to be invested in. Okay. SLV is no. GDX, by the way, GDX is really nice, and NAM is really nice. If you think this thing is going to continue, NEM is unbelievably interesting. Copper is, well, doing what copper usually does. Is a really nice indicator of what's going on with this infrastructure buildup, and regardless of the narrative that AI is over, it's not over, it's overbuilt. No, we don't know that as of now, but copper knows. Copper prices are consistently banging into the all-time highs, time and time. It's, once again, it's not Bitcoin. It does things its own way, but all of the trending retracement, you buy this, you buy everything essentially in copper, and yeah, if nothing else, this is a good signal. That's the AI buildup is not over, not even close. Things like FCX, COPEX is an interesting thing to buy. We are looking to buy this thing, definitely. US, yeah, we're getting into these things. Since we are talking about copper, let's briefly mention the dynamic which has been going on in with the AI stocks and all of this relative exposure to AI. We've seen this multiple times during this massive investment megatrend. You have a mania picking up. People are getting in, and look at this. This is like this embodies this MU stock and the earnings and the way it played out the best, probably. You have MU earnings coming out. Earnings are unbelievable. They are so freakishly good. Like, they are literally the best earnings in corporate history. Literally. And the stock only falls after that. Not only earnings were good, guidance was unbelievable. Guidance was wow. Like, it can knock your feet off. So, yeah. But the stock since then fell, what is it? 40%. And we've seen this multiple times. This is your normal trending retracement. But the underlying dynamic, the fundamentals are in place. The copper price, for example, right, is one of the things. And yeah, I would not be surprised that we are going to be going back up again soon. All of the weekends left this thing, and now we're going back up. Well, obviously, this was EWI. People are lost a lot of money here, but now we are a positive trend. MU is, well, not yet positive trend, but we are slowly shifting into positive trend everywhere, especially NVIDIA, by the way. NVIDIA shifted into the positive trend here, finally. And when NVIDIA shifts into positive trend, it kind of tends to move. At first, it kind of tends to move. This was a shift into positive trend here, and we went up until you buy everything here, right? Positive trend, buy this dip. This dip that's going on, you buy this. But then created an intermediate lower high, took it out, broke it, and this was shifting to negative trend here. And since then, only consolidation. But now we shifted again, and now I would not be surprised to see once again NVIDIA leading this market, which we are essentially positioned for. We have, on this break in trend, 3% invested in NVIDIA, plus, again, our favorite spot position plus call spreads. We have 240, 250 call spreads expiring in September. Playing the earnings, playing. So we shall see how it's going to play out. Yeah. So this trend with AI is not over, but there are very large risks looming on the horizon when it comes to the rates market. As we know, we meaning the practitioners of the market, as you can see this. Market is non-linear. When you have this type of consolidation and a clear as shit, this is it. Like, this is the break out of this consolidation. When you have this thing, it usually does this. It doesn't wait. It doesn't go at a 45-degree angle slowly. As you can see, this was a very nice example. This isn't a very nice example. Same thing. Very clearly defined level in gold. We were waiting under it for years and years. Then you have a break, and then you never stop. By the way, this break came in whilst nothing was happening. Literally nothing. There were no news you can ascribe this break to. There were no catalysts. Nothing happened with the rates, with the dollar. Nothing happened at all. But it still did what it... Well, we call this flow. This is it. Like, this is what you consolidate, then you break out, and then it's just... It just goes. Flow just pushes it higher. Same thing is happening here. And given how things which are usually unbelievably positive for the long end, meaning, well, positive for the bond prices, negative for the rates, negative for like inflation, that are expected to come at 3.8% comes at 3.5% and shows deceleration across the board, this is all that you get. This is all that you get. Test of trade, and that's it. And then we just onwards once again. Inflation that comes out negative here again on this day, by the way. No reaction. We close actually unchanged on the day. Yeah, this is going to be the problem. If they do not raise rates to combat inflation, to gain credibility, well, I don't think that this is the case. The natural expansion of term premia pushes this thing higher. And I don't really think they have any. They can do anything about it. They can artificially come in and engage, create some facility and engage in explicit QE program. Yeah, but that's gonna be highly inflationary. That's gonna be unbelievably positive for gold. This is how you get gold to 7,000+. This is how you get Bitcoin to 125 back. This is how you get stocks and AI megatrend ballooning out of the orbit and literally bubbling, and then you going to 2,000. This is how you get Nvidia going to 400, if that happens. And so far, the signs are there. There is a possibility of them raising rates, but simply raising 25 basis points this upcoming meeting, changes literally nothing. Literally nothing. Nothing at all. What we need from the Federal Reserve is a clear guidance for more hikes. Yeah, we're going to raise 25, but next time we're going to raise 50. Yeah, and probably next time we're going to raise another 25, maybe 50. If that's the case, yeah, that's going to be painful as fuck. But the funny thing, they can do that for the simple reason that the debt to GDP is where it is. Rates on them in and of themselves are rising as they are doing. Well, if they raise rates, they are fucked. If they don't raise rates, they are fucked. So, I don't know how it's going to play out. I know that an uncontrollable and very fast, from the rate of change perspective, like this, move in the long end, even though right now, nothing reacts, especially equities. Equities just don't give a fuck. Don't give a flying fuck to rising rates at all. Literally, they don't care. But when things start going this fast, yeah, just simply on the basis of correlations and algos selling these things, trading this, they're gonna sell this thing. We're gonna get a move in, our desirable move in Bitcoin to 50, move in equities lower, in gold lower. Gold is gonna sell off maybe a couple of percent, and then it's gonna rip like a flying, I don't know, eagle to the skies. So what we are contemplating as of this moment is, once again, we have, oh, by the way, our position that we put on literally this week is long queues. I just cannot be ignoring this type of a signal. You can see the history of the signal is a positive trend, a massive shift into positive trend, massive move higher, shift in positive trend, move higher, shift, move higher. We've shifted into positive trend again. And yeah, we've accumulated 20% position in Qs. So we have 40% invested in Bitcoin, in gold, 20% in Qs. We are looking to put on upwards of 10, 15, maybe even 20% in Bitcoin, but nominally is going to be 20%, maybe so. But we're going to use leverage for that. We're going to use options. The rest, those 40, 30% of the vacant capital, we are just waiting and seeing here. We have ideas with cybersecurity is nice. No, we want to actually add to some of the names like STX in the AI space, shifting to the positive trend as well. We want to diversify with XLV. We want to buy XLE once again. Our energy. We're gonna get it in energy as well. ITA, the defense stocks. We really want to get back into the defense stocks. We have a couple of baskets that we created, LMT and all of these things. Yeah, we're gonna be buying these things again, especially LMT. LMT looks really decent, and RTX looks really decent as well. Yeah, that's what we're gonna be doing anyways. We shall see how it's gonna play out with rates. There will be. I am absolutely certain that this autumn is gonna be a very, very volatile autumn. Either down to up to down, I don't know, but the volatility is gonna be off the charts. So yeah, how we are gonna be defending against it when the Fed meeting comes. Once again, we are probably gonna be even this week. I made up my mind, and we're gonna be accumulating puts on TLT. Given how low the relative volatility is, the IV is, and oh my god. Given the signal at the long end, this will be a nice what is it? A nice hedge to the portfolio. Yeah, that's what's going on with the investment